Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin and we're going to be discussing the terminal price. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Let's go ahead and jump in. So, before we talk too much about the indicator and defining what it means, as always, we have to give credit where credit is due. It's an important thing to do when you're talking about an indicator, especially one that is not yours. This indicator was created by Checkmatey and David Puel in November of 2021, it appears. So, what I'd like to do is, before we really get into this, we got to define everything. So, really, this indicator is a couple of different ones, right? It's the terminal price and the balance price. Now, the terminal price has been useful for helping to identify tops. The balance price has been useful for helping to identify bottoms, right? Bitcoin normally bottoms out around the balance price and it normally tops out around the terminal price. So, the terminal price is kind of difficult to understand if you haven't looked at some of these terms before, but we're going to try to define it and we're going to go one step at a time. So, we first must understand a concept called transferred price. Now, the transferred price, and these we're still going to have definitions nested within definitions, but the transferred price is just simply equal to the cumulative value days destroyed divided by the market age times supply. Now, value days destroyed is defined as price times coin days destroyed. Clear as mud, right? But we can actually go define coin days destroyed, right? So coin days destroyed is another indicator. And one of the things interesting about coin days destroyed is that you will see major spikes around pretty volatile moments in the cryptoverse, right? You get major spikes at tops and at bottoms. We also got a major spike at the mid-cycle top last cycle. We got a major spike at the mid-cycle top this cycle. So coin days destroyed in and of itself is an interesting indicator, but it's defined as the sum of all native units transferred that day multiplied by the amount of money or the amount of days since those native units were last transferred. So, for instance, if you have 5 Bitcoin in a wallet for 20 days, then 100 coin days are created. So, when those coins are spent, then you have 100 coin days destroyed. So, remember, transferred price is equal to value days destroyed, which is price times coin days destroyed, divided by the market cap, or divided by the market age times supply. The market age is just defined as the amount of days since the first price data point, and the transferred price can be seen as a life-to-date moving average of spending behavior. Now, that is defining something that isn't even the thing we're trying to define. It's just making up the thing we're trying to define. The terminal price, which is what we're interested in this video, is equal to 21 times the transferred price. Okay, so that is how the terminal price is created. And you can see if you sort of zoom in at prior tops, the actual top for Bitcoin occurs around where the terminal price is. Okay, now in the first cycle, you can see it got above it a couple of times before the actual top was in. And in 2013, it actually got above it a couple of times before the actual top was in. If you look at 2017, once it was above it, the top was in. And if you look at 2021, it did get above it a couple of times before the top was in, but the actual top occurred much lower than the terminal price, much lower than it was. And I think that second top really threw a lot of people off guard. Now, one of the things that I've mentioned, and you can kind of see it in this indicator as well, is diminished volatility. We've done a lot of videos recently where we've seen this very concept, right? One of those is if you go look at the Pi cycle top. We did a video on this where it seems like every time these moving averages cross, they cross a little bit less spectacularly, right? I mean, they used to cross a lot. Last cycle, they barely crossed. So if you divide the moving averages, you'll notice that in order for it to cross 1, it would have to go back to where it was last cycle. but every cycle has seen lower and lower peaks. So you might get a situation where everyone's waiting for it to signal by going back up to 1, but it never actually signals because you can see the lower highs in this metric, right? Something to keep in mind. Now, if you look at the stock to flow, it was a similar thing, right? We did a whole video on this as well, where if you look at the stock to flow, what you'll notice is the orange line, the price was, first got closer and closer to it, and then now it's getting further and further away from it. So if you take the deflection, you can also again see the lower high structure. So what I'm suggesting is the extent at which it's going above the terminal price seems to be diminishing from one cycle to another. And so if you take the price of Bitcoin divided by that metric, you get something that looks like this. And what's really interesting is initially we saw it going about the same amount, right? For the first few cycles, but at least, if you measure it from here to here to here. But if you ignore that first data point, then we've basically had lower highs as measured when you're looking at the price of Bitcoin divided by that metric. So, for instance, if we were to go over here and just simply draw a trend line through these peaks, you can see there is a chance that it doesn't actually make it up to 1, which is where the terminal price would be hit. So, I just want people to have that in mind. It doesn't mean that it can't make it up there, right? It doesn't mean that it can't. It very well could get back up to that level if it were to follow, say, the trend from the first couple of cycles where it just kind of goes right back up to where it was. So do keep that in mind. It doesn't necessarily have to follow the diminished peak outcome, but I just want people to be aware that the diminished peak outcome is an outcome that should at least be on your radar, right? And if it were to continue like this, perhaps it would get up to about 0.9, which is really interesting because if you do the pi cycle top diminished peaks, it also shows about 0.9 rather than 1. So that's just something to keep in mind. Right now, the terminal price, and again, this is not my metric. It was created by, you can see the creators here, Chuck Mady and David Puel. Right now, the terminal price is at 188K. So just keep those numbers in mind. If at some point in the next few months or year, you're seeing the price of Bitcoin get close to that value, then just keep in mind that historically there's not much more higher to go in the cycle. The other thing to remember as well is that all models are wrong, some are useful. And a lot of times, when I create my own models, I sort of try to assume, okay, it's probably going to be wrong. Why is it wrong? And a lot of people give a lot of models, a bad rap because they miss something, right? But rather than look and call it a failure or a success just simply based on if it crosses a certain threshold, I would encourage you to dig deeper into the metrics, right? Look at it in a different way. And that's when you can sort of see these trends emerge that otherwise you might not have noticed, right? Taking the deflection from the price and the metric that you're looking at. The same thing goes again with what we were talking about a few days ago, the pi cycle top, and dividing those moving averages and then just seeing those diminished peaks. We've seen it actually many, many times and across a lot of indicators throughout the years, right? If you go look at say the extension, the natural log of the price over the 20-week moving average, we've seen something very similar where the extension from the 20-week moving average from one cycle to another tends to diminish. That doesn't mean that the price of Bitcoin can't go higher that cycle just because it hits that top, right? If you look at it here, you can see that it tagged this trend line back in March. But obviously the price of Bitcoin is higher now. This was one of the reasons why I said back over here that the market needed to cool off for a little while, because the extension beyond the 20-week moving average suggested it was time for a cool down. So just keep in mind, and even last cycle, right? Last cycle, you can see that it had a couple of tags on the trend line. In 2013, it had a couple of tags on the trend line. So just remember that there's a lot of times, even with models that you don't necessarily like, you can still find value in them if you're willing to look. So in the terminal price case, I think, yeah, like look at this terminal price and see if it gives some validity, but also look at the trend of it. In 2013, it crossed it pretty aggressively. 2017, not as much. 2021 barely crossed. What happens if this time everyone's waiting for it to cross and then it just barely misses it, you know? So just something to keep in mind. We're going to keep this video relatively short. If you guys like the content, make sure you subscribe, give the video a thumbs up. And again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. I'll see you guys next time. Bye.